Keep it with interesting insights, and this is our Insight Edge segment. Manglam, you're focusing on Tilaknagar Industries. Tell us why.
Yes, on the one hand, you have the rise for spirits growing, and the other, you have the rise for spiritual tourism growing as well. So that's interesting. In India, everything happens, right? Tilaknagar Industries, 13% growth in their revenue, 62% jump in their EBITDA, margins growing by almost 600 basis points, and we have the net profit growing by 145 points. Remember, a lot of it has to do with the subsidy as well. Even if you adjust for that, the EBITDA's moved to around 65 crores and the net profit at 64 crores, which is a big booster that we've seen compared to last year. What is it that led to the 20% volume growth? Remember, we had the shift in Andhra take place when it comes to the route to market policies. So the fourth quarter volume growth of 20% was led by a volume growth of 33% in Andhra, which is among the key markets for Tilaknagar Industries. And they said that next year as well, they will continue the volume momentum in high teens, which will also reflect in their revenue growth of high teens. And margins would expand to 15.5% to 17%, despite them spending more on ads on account of premium launches that they're doing. And this is a, by and large, brandy company. Last year, they did 95% of their revenues from brandy. This year, that contribution has come down to 91% because of them moving into whiskey-flavored products, some gin, etc. as well. And now they're believing that by the end of this decade, by 2030, the brandy contribution will go down to 80%, making it a whole fuller portfolio while still being positively skewed towards brandy itself. Let's listen in to what the management of Tilaknagar Industries said to us this morning.
We have bounced back quite strongly in quarter four with the overall volume growth of 20%. Of course, the growth in Andhra Pradesh would be in excess of that. I think that's looking more like 30-35%. And, with the strong momentum build up in quarter four, we're carrying this forward into quarter one and this fiscal year as well. I think the volume growth for this year will largely mirror, the quarter four volume growth. I think we expect clearly high teens volume growth for this entire year. And our revenue growth should roughly, track the same percentage. I think going forward, the NSR will, remain largely in the same range. I think while we do get the benefit of premiumization and selling some premium brands, but we did a price correction on our flagship brand in Andhra Pradesh in November. So, that was done in line with, the competitive movement in that category. So that price correction now we'll have the full year effect in this year. So, by and large, the NSR will remain same. And the margin outlook also, will be around 15.5% to 17%. That is the outlook which we expect for this financial year. We have few premium launches which we have already done. We launched Monarch, which was a luxury brandy in September of last year, and we intend to launch a luxury whiskey in the first half of this year. So, the premium brands, the first year, the advertising and marketing is going to be slightly skewed. So, with increased A&SP spends, that will put some downward pressure on the margin as well. The previous year, brandy as a percentage of our portfolio was closer to 95%. So we've made some progress in this year now where brandy is 91%. And, our vision is that, by 2030, which is, say, 3-4 years from now, brandy will still continue being the core of our business, but we expect it to be around 80% by 2030.
Okay, all right. Well, let's move on.